earnings season, one thing is real clear. Retail is as confused as ever. With big winners, big losers, everything in between. So how do you distinguish between the haves and the have-nots ahead of time? I got an idea. Why not ask the landlords? Last night we spoke to Jim Taylor, the CEO of Brixmor Properties. That's a real estate investment trust that owns hundreds of open-air shopping centers. That's places where people still shop, unlike malls, which have become bowling alleys and wastelands. Taylor told us Brixmor is selective about its anchor tenants, the ones who get the largest pieces of real estate. They want stores that draw traffic to the rest of the complex, and they're happy to let go of anyone who's not doing good business when that lease runs out. When we looked over Brixmor's top tenants, something jumped out at me. 3 of the top 7 are off-price chains. They're Cramer faves, TJX, Ross, and Burlington Stores. In fact, TJ Maxx is their #1 tenant. I've been pounding the table in these stocks for ages and ages, and all 3 have roared higher this year, and I think they're going to continue to roar higher. Look over the other shopping center REITs. You know what? You're going to see the same thing. Regency Centers typically likes to rely on supermarkets for its anchor tenants, but still has TJX as its top 5 tenant. In its most recent investor presentation, Regency touted TJX and Ross stores as 2 of their best tenants that are opening lots of new locations. Federal Realty, our friend Don Wood, FRT, owns lots of mixed-use properties in densely populated urban centers. They call out TJX and Ross as members of their top 25 tenants. Kimco, Strip, interesting operator, making a lot of money right now at good occupancy. TJX is their largest tenant, with both Ross and Burlington in the top 15. Kimco also hammered home the point that these off-price chains, they're still expanding. So what makes these companies such great tenants? I think the landlords love them for the same reason customers do. Something like TJX or Ross stores, it's got a treasure hunt atmosphere where you can search for incredible unmatched deals. The basic business model for these off-price chains is that they buy fancy stuff from department stores that are desperate to unload their old inventory at a huge discount. They've got the cash, and they mark it up a bit, and they sell it back to you. That's why shoppers keep coming back. When TJX or Burlington or Ross generates more traffic, that benefits their neighbors in the same shopping center. They are all the winners from the roadkill losers in the mall. This is all about value, people. You simply can't find deals this good online unless you're going to the nascent websites of these very same chains. For people to get up off their couches and actually shop at a physical store these days, you need to offer them something they can't get online. The off-price chains do that, and it is working. Thanks to the strong sales, TJX, Ross stores, and Burlington are all great shape financially. You know landlords love a tenant with good credit. Plus, the off-price chains are expanding. The only thing better than a tenant with good credit is a tenant with good credit who wants to rent more real estate from you. TJX has just over 4,400 stores now. Over time, they plan to have 6,100. Ross stores, 1,800. They're going for 3,000. Burlington has only 700 stores. They want 1,000. Finally, best for last. What really sets the off-price chains apart is their counter-cyclical nature. That's some authentic Wall Street gibberish, meaning they tend to thrive in a weak economy. When times get tough, department stores need to dump more inventory. So sourcing becomes a lot easier for TJX, Ross, Burlington. Meanwhile, cash-strapped consumers start trading down, looking for better bargains, and these are the stores that offer them. Of course, the off-price chains work when times are good, too. This is a fabulous economy for the consumer, and all 3 of these stocks are on fire. But the fact that they benefit from a slowdown means the landlords can sleep soundly at night. They don't need to worry about a TJ. They don't need to worry about Ross and Burlington going under the next time we have a recession. Let me give you a little more color in each one. TJX is the top dog. It's the parent of TJ Maxx, Marshalls, Home Goods, and HomeSense. This stock's given us a 17% gain since I recommended it after a major sell-off in May, and it's up 32% year-to-date. Company reports in a week and a half. I do expect excellent numbers. TJX has the off-price business down to a science. Ross stores, the parent of Ross Dress for Less, and DD's Discounts, a lot smaller than TJX, but just as well run. Stock's up 34% for the year. Company's growing rapidly for a brick-and-mortar retailer. They have roughly 1,780 stores, and at the current pace, they're opening about 100 new ones per year. Ross reports a couple weeks. I like it going to the quarter, not as much as TJ. Last but not least, Burlington Stores is a little different. has the same off-price model, but it's the smallest of three. It's more of a turnaround story. The company's gotten much better at managing inventory. The merchandise flies off the shelves much faster than they used to. Full disclosure, we own Burlington for my charitable trust, and this week we did a little trimming because the stock just had a huge run from 191 to 202 in a couple of days. I still believe in Burlington. I predict strong results when it reports later this month. But I also believe in discipline. My discipline tells me you need to take something off the table after a major rally. The stocks of these off-price chains are much cheaper than they should be, and that's in part because people on Wall Street wouldn't be caught dead in a TJ Maxx. They wouldn't. Not me. I just got a nice pair of slacks for $17 that were at Macy's for $40. Hey, how do you think I got rich in the first place? Thanks to this snobbery, TJX trades at 21 times next year's earnings, Ross at 22 times next year's earnings, and Burlington at 24 times. That's a bargain when you consider the earnings growth they have. Let me give you the bottom line here, okay? The bottom line is maybe the best way to determine who's a good retailer is to listen to the landlords. The shopping center real estate investment trusts love TJX, Ross, and Burlington. So maybe, therefore, you should too. Mad Money is back after the break.
Hi, I'm YNSN Emma Kinseko, deployed at Camp Lemonnier in Djibouti, Africa. I'd like to give a shout out to my friends and family in Thousand Oaks, California. I love you and miss you all. I'd also like to thank all the veterans for watching this for your service.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.